when I host the room, I know when someone's usually not serious when they come in the room and they say, hey, I'm long, I'm short. I don't even know who they are. One guy says, I'm short. I says, tell your wife not to wear heels. So that's, and yeah, I told this to one of my friends. I got to use that. I'll give you credit for it. But I'm like, I don't care what you are. If I respect what you think, then I do care what your thoughts are. But nobody really cares about someone who's a stranger comes into an environment and right away wants to tell them how smart they are. So it's not about that. You got to be a very secure person to be a good trader or even just a decent trader. So I like to use metaphors and stories so they stick out. So many guys have heard this story, but I have to tell it and work us into thin spots. Now, thin spots, if you're around me for any period of time, you know what that phrase is and what it means. What's the dynamic that makes it useful, all right? Well, if you think of how many people have not heard of the baby bird story? 1, 2, 3, 4, 5, 6, 7. Good, all right. So how many people want to hear it? Everyone? All right. Yeah. So the characters in the baby bird story are the baby birds. They're the non-professional traders, the retail traders. Mommy bird is the market price, and the hawk, professionals. Now, you can almost assume what's going to happen. Non-professionals are usually helpless. They're helpless like baby birds. They need to be fed, be taken care of. Mommy bird is going to do that. She's going to come and feed them. You almost know how this is going to end because the hawk's not going to let that happen. Professional traders are going to come in and ruin things for retail helpless guys. They're going to rip mommy bird's head off. Her body's going to flail to the ground. Baby birds are going to be left with no fill and stuck. I added to this story because people always ask, well, what happens to the baby birds? They fall to the street and a car runs them over. And they're dead. That's blowing your account out, right? Run over by a car. That's the way it feels. After you hear this story, you get a good sense of why support is support or resistance is resistance. Let's just look at this story as support. And we can get into one thing that's important. Another element of what's one of the first things I would teach someone about looking at a chart would be, where are the fights? If we were able to build a box around certain things visually, now you can't do this on your chart, but visually, these are areas you got to say are kind of important. And do you notice the hole in the box, each one? So there's a fight here. Who wins? Shorts. Who wins? Shorts. Who wins? Bulls. Kind of going off of what Dr. John said about an HVN below an LVN, and there's some follow-through, right? There's some follow-through. So your visual, you have to have the visual of these congestion boxes or these fights. Now when you do that, we're going to focus down on this one in here, just using the baby bird story as in a real-time simple chart. If you could see them down in here, let me back off a second. In any fight, there are people who are short and long. You don't have to be long or short, but always in the market there are people with open, long, and short positions. Well, once the fight starts to get decided and there's a breakout in here to the upside, those short, which would be the baby birds at this point, are usually stuck. They become that helplessness that the story tries to create. What happens when you take all this heat, and we've all been there, right? We've all been there. You're short, you take all this heat, and the market might give you a chance to get out for maybe a scratch or a break even. We're begging to get out at that point. We've all been there. You don't want to be there a lot. After you're short, you're a buyer to get out, right? We all got to cover that position at some point. But because we faced all that pain, we're begging and we're saying, God, just let me out. I'll never do this again. I won't hold on to that position. I certainly won't add up here. But some of them are so naive, they'll be like, well, you know what? I did all this pain. I'm going to get a break even +1. I'll pay for commission, which is to me, that's a fireable offense. Break even +1, I think, is the biggest joke I've ever heard. It has nothing to do with the market structure, because your price and your entry +1 matters in the whole world of valuing price. It's disgusting. And people will do it, and then they'll really miss it, because if I go with this illustration, these are the nesting birds are those that are trying to exit this short position. And just like the story, they're helpless. And the hawk takes mommy bird or the worm right away, and they're left chasing it up. That's what makes support support, not because someone created a nice mathematical formula. Those things could work. You know, Dave and I, we talked about the R1s and S1s. Every line on a chart works if this dynamic exists, where indeed people are stuck short and have to get out for a loser. I don't have to get long, which I'm a buyer if I want to get long, right? But I have to get out of a short. There's a difference. And when you have to do something, it's more emotional, especially when there's money at play. So that's how the story works onto a chart, where you could kind of see if people missed it in here. To do what? They didn't miss selling it because they could sell it here at better price. They missed buying it. They get a chance to buy it again, chances are high probability support. This is simple, but it's not to most of the rest of the world. Remember what I said earlier? You didn't really acquire and understand a skill until it becomes simple to you. This got to be simple to you. Visualize the boxes, understand who's stuck, understand why this could be support, and then we move into qualifying it. Are you going to make $1 million just having this pattern and do it? Of course not. But boy, it's a huge building block to understanding why support would work. Instead of just saying, oh, buy support, sell resistance all day, and life is good. And that happens. People do it all the time. And you know what they say? That's not working. I got to get better support. You know, I got to find a better way to find support. No, it's not working because you don't have a skill to qualify your support. And you don't even know that this dynamic has to exist. Again, this is the line in the sand, and the best line in the sand you're going to get. Just to recap, these guys are the shorts. The nesting birds are the ones that are turned to buyers to cover that short. And the hawk takes the price away. Anytime something moves fast, what happens? More people miss it. If someone ran from that door to this door real fast, there would be more people that missed what they were wearing or whatever else instead of moving slowly, correct? So it makes sense. The faster something moves, more people are going to miss it. Price is the same way. The faster it moves, the more people are going to miss it. But they're not going to miss on a move up. Remember our P&F, this is a move up. They're not going to miss selling it because they could sell it better. It's moving up. They're going to miss buying it. Well, we use the phrase, or I use a thin spot. Just think about it a second. The faster a price moves up, the less volume is going to be in that area, right? Move fast. Just like single prints for market profilers. So look at this thin spot in here and this thin spot in here. Do you think it's coincidental that the market subsequently stops right there? You guys have been watching this, know that that's not a coincidence. You know it's a high probability area of support for the same reason of the previous chart and the previous metaphor. Another one. You think it's coincidental it stops in there. Again, some people might be impressed and then might think, well, he's just cherry picking charts. I'll prove to you that I'm not tomorrow. If you have good support resistance, it's just as good when it doesn't work. Now think about that. If you got something that's good and it doesn't work, it's sometimes better because it usually works, right? There's a high probability of something. So when you got something that's good and it doesn't work, like this, look at this. It stops there once in the purple X, but this white line, gone. Good traders, traders that are from the same environment I'm in front of, or Brett, right, all the prop guys. Do they hang on to losers? They have a plan. They're going to get out. They're not going to typically hold on to stuff longer than they anticipated. Everybody's risk threshold is different. What's a big loser for me might be different from Brett or one of his guys. It's all relative. It's all about your plan going in. So if I'm long in this area because of this thin spot, I'm not still going to be long down here and then try to sell it like a little baby bird begging to get out because I suck at what I do. Because that's what be sucking at what you do. And so many people will take a trade like this, screw it up, and then look for every reason not to have accountability that they suck today. And that's what you got to know, is that sometimes you stink and you need good people genuinely around you to say, you were bad today. You sucked. He threw you 2 hanging curveballs, and you didn't even swing. And whose fault is it? The fans were too loud? Right? That's the crazy stuff your mind does to you. And I think that's what I'm looking forward to Dr. Brett today and tomorrow. I think he's really going to dot I's and cross T's as to why we think that. And that's where it's dangerous. When do you stink? When do you say, you know what, maybe I traded this and took a small loser, and now I'm looking to at least see this as resistance as the market, as you draw this line through. Why? Because you got people stuck long, playing some support potentially, and then it comes back down, and you could see where old support, new resistance. How often have you guys heard of that in the past? Old support, new resistance, and that's why it would work and why old support's new resistance. The whole dynamic that plays out. Now, I added this as a little bonus last night. I figured you guys deserve a little extra, so I added this. Plus, I needed a little bit more time to fill. That's really why I'm doing it. Now, today was a lot of basic stuff that for edge guys might have heard, and maybe it's good for the repeat. But this I wanted to add because how many times do you look at a chart, and after you've been studying charts, you kind of know, oh, that's obvious where I put my stop. Like if it's just obvious to a 5th grader where little Johnny would put his buy stop to get out of a short, and you got to know that, right? Buy stops get out of shorts, sell stops get out of longs. If it's a little obvious to Johnny, I don't want to put my stop where little Johnny puts it. Because if it's obvious to Johnny, it's obvious to, not Johnny Kepler, little Johnny, 5th grader. If it's obvious to little Johnny, it's obvious to the rest of the world. And if a lot of people have buy or sell stops in a certain area, it's a magnet, and we're going to do a little group exercise to kind of illustrate why, not illustrate, but really cement home why a lot of buy stops, sell stops is a magnet. So again, here's little Johnny ice skating. There's little Johnny with his buy stop there. Because it makes sense. It's obvious, right? You would put a buy stop above consolidation. Does it make sense? I mean, there'd be buy stops above here maybe, buy stops above there. The point I'm trying to make is, if it's obvious to 5th graders as to where they would put their buy stop to cover a short position, you could get short, but be damn certain that you don't want to be stuck for this move. Okay, you missed the long, just don't be stuck short for the whole damn thing. Because all little Johnnies are trying to chase it up. Because they said, that's where I put my buy stop, Mommy. And all they do is go crying to Mommy when they're wrong. They suck at being wrong, just like most retail traders. That's the difference between good traders and bad traders. Bad traders and retail traders are what? They're babies when they're wrong. They have everybody else to blame. Now, 5th graders have an excuse. They're 5th graders, not adults. You look like that too much, you're not going to make it in this business. So here's the exercise that we're going to do. Why many stop in a certain area become magnets. All right? Everybody knows the phrase, after you sell it to get short, you're a buyer, right? Let's say 2, the number 2 is a lot. And what do you mean by that? Well, we're going to use 6 people, 2, 2, 2, all right? And we're just going to assume that 2 is a lot. 2 is a lot of buy stops. 2 is a lot of open positions. 2 is a lot of resting orders. All right? And we're going to do it from buy stops. Who wants to, how about Craig and Chuck, because you're already up there. Would you mind standing up and at the top of the stairs? 2 Packer fans. We'll throw footballs at you, see if you can catch them. All right. These 2 guys representing buy stops. And it makes sense. Buy stops are where? Above the market. We got to know that, right? Sell stops. Buy stops are also used mostly to get out of a trade and mostly for a loser. Don't tell me, well, they could be used to get into a trade, Anthony. Yeah, of course they can be. But they're mostly used to get out of a trade, mostly for a loser. And that doesn't have to be a hard stop in the book. It could be a mental stop, whatever. There's a lot of buy stops. All right? Now, Mike and Anthony, stand in the middle, if you don't mind. These 2 guys, at that price, are opening up. Yeah, no, on this side. Thank you. These 2 guys are opening up a short at that location. All right? Craig and Mike, or Craig and Chuck, rather, are buy stops at that location. These 2 guys are short at that location. All right? What happens when you get short? You guys probably have strategy runners and automatic orders that go in. After you get short, you put in buy orders, right? Below the market for a winner, above the market for your stop. Does that make sense? When you're short, remember, these two guys are short. They got to get out with a buy order. Two of them, we're assuming, for example's sake, that it's a lot. John and Bruce, do you guys mind coming down here? Just stand down here. Bruce from Indiana, he's the smartest guy in Indiana, which makes him the dumbest guy in Illinois. You like that one? All right, get over there. Indiana. All right. These two guys represent resting bids to cover what? To cover the short trade for a winner. And they're excited, all right? I'm representing price. I'm the price. Well, obviously, the price is where these guys open their short. That's how they got short, right? How do you guys feel? And this is cool. Markets goes down, market goes up, just like the stairs. How do you feel when you're short and the market goes, on the price, remember, and it goes down? You're feeling pretty good, right? But you're not filled. How do you feel now when I get close to them? A little bit better, but you're not filled. How do you feel when I come back to your entry right now? A little more nervous, right? Everybody's been there. Almost a winner, is a winner, it isn't a winner, but you're not going to scratch it. You're thinking about it. You're still a buyer, right? You're a buyer up there for a loser. You're a buyer down there for a winner. So are you. Now the price moves through you. Now you're short and it's against you. How do you feel? A little bit more nervous. Like, damn it, I wish I'd have bought it down there instead of down there, right? So what do? I wish I'd have bought it down there as a winner. So Bruce, move up a step. Just move up a step. So stop right there. So you adjusted your bid. There's buying pressure. Why? Because there's a lot of shorts. There's a lot of buyers, and there's a lot of buy stops here. So it comes up right here, but it doesn't stop you out, and it comes back. Now it's a break even. Should I scratch it? Maybe I should. No, I'm going to let it play out, because every time I always screw it up, and I'm just going to let the damn thing play out, because that's what my wife told me, and she's always right. They are always right when it comes to trading. Unless she trades, don't listen to her. So, again, on the price, coming back down, you feel better. You almost got stopped out. You almost get a winner. You almost get a winner, but you don't. So now, Anthony, you step up. Because now you guys are getting mad. You're getting angry. You're short. You had almost a winner, almost a loser, almost a winner. And this is what's playing out. Remember, for example's sake, there's shorts in the market. And there's a big area of a lot of buy stops. Where's the pressure? Still here. They're still here, right? So if I move back through them, he's mad again. They're mad again. Come on up. Because both of these guys are like baby birds. And they're like, nah, I'll scratch it now. Should have scratched it. I should have listened to my wife. I should have scratched it, and you don't, but you come back down, and you guys almost get filled, and you don't. Come on. These guys are the reason why these guys are a magnet. Does that make sense? These guys, the buyers, the resting buyers for profits, are the reason why these guys are a magnet, right? If these guys weren't here, these guys wouldn't be there. It's that simple. And so everybody says, damn, market always gets my stop. Well, that's what a market has to do in order to exist. It's personal where they hate you. It's because it's what a market has to do in order to function. It's got to get out the weak hands or the positions if there's too many open ones. And for this example, there were a lot of open short position. And the buyer still didn't get it, and you're just continue, push me up. You're chasing. And then the stops get elected and are off to races. These guys are pushing at me. Why? Because of the emotion of the two guys that put the short trade on in the first place. Does that make sense? I don't know if that was a good exercise. I think it makes sense. So they get stopped out. They're gone. What happens after you guys sit down? Because they're elected. Thanks, Craig. So you guys are out. These guys go away. Once you get stopped out, you pull your bid, right? You no longer need those guys, so you could go. So those bids are gone. You guys get sit down. You don't have an open position. And I'm still priced. Where do I go? There's no more traffic in the way. I'm going back down because there's nobody left. And now those guys are mad to say, get stopped out, and then it goes. Yeah, no kidding, because you were short with little Johnnies in the world. Just know that time it's all relative, but at some point you got to make a decision to say, price is going to tell me first if I'm right, wrong, or okay as far as my location. Price. How long does it take for it to go my way? How am I going to get greedy? Understand the emotions others go through just by the emotions that you guys go through. The path got clear, the market went down. That's why it stops you out and then goes. How many people raise your hand and get stopped out and then it goes your way shortly after? Me. Happens to me all the time. But I don't let it bother me. The more you let it happen to you, the less it'll happen. And you try to, for me, to scale. And so I'm not as mad if I don't get a full profit target. But if you've traded for 17 years, it's going to happen to you a ton. It's just part of the business. But you try to minimize it. So we covered that. B2B bars. Before I get to these, I'm going to leave most of this for tomorrow, and I want to give Dr. Brett some time. We're going to take a short break. But what kind of questions do we have for me about what I covered or anything else for that matter? Go ahead. What was your name again? I'm sorry.
Merritt.
Merritt. Hey, Merritt, how are you? Glad you came in.
Thanks. Maybe you want to cover this tomorrow or whatnot, but I was curious as to your thoughts on the incomplete auctions at highs and lows of areas. If you feel like that's a strong area for a revisit or different based on context, or what do you
I would say, for me, an incomplete auction, not with the same answer that a profile guy like John might give you, but an incomplete auction for me is a little bit of what the exercise went through, is like there's an imbalance enough where you have to balance it back out. So I use delta profiles instead of volume profiles. And delta profiles, I don't know if I don't have an image of it, but they're imbalances at the same price, a lot more selling over a certain amount, over a long period of time than buying, right? So you get a long delta bar at one price or in one area. So to me, it's incomplete until you go and satisfy that and finish it off. You know what I mean?
They're still waiting to transact there a lot.
Right. Well, and it creates that same magnet example as that, where it's like, here, it's not just the trade has to go against you for it to be a magnet, but if a lot of people are short at the top of the step, right, and there's a ton of shorts open from there, then there's a ton of buyers in here. So if you can identify accurately there's an area of still open shorts, it's an incomplete auction. It has to go back there just by nature because it's got to clear out these buyers, right? And so what happens? If I'm the price and Robert, stand up with me. You're one of the best looking 64-year-old guys I've ever seen. Nice job. Stay behind me. I'm the price and you're the buyer, right? I've known Robert a while, so I could say those things about him. Don't get crazy. You're the buyer. You're bidding. I'm and I'm the price. So walk with me a little bit. If someone's short, right, and every time I move away, you get a little more nervous as the buyer trying to cover. Why? Because your profits are shrinking, right? And if your profits are shrinking, you're like, damn it, I wish I would have taken it there or there. Now you can't. So I go up a little higher, and you follow me. And that's self-fulfilling prophecy. If indeed there's a lot of shorts up in here, there's a lot of this going on. And he's just pushing that. I wish I would have covered, I wish I would have covered. And then it gets to the point where everybody's crawling over each other to go where? To go back to where they got short and keep coming. And finally you're like, boom, you get filled and you scratch the trade. You go sit down and everybody scratches it because they don't want a big winner to turn to a loser. That really stinks. And the same kind of dynamic as that previous exercise, that's cleared. So it's got to go to complete that auction, And it might be a different definition of what an incomplete auction is for straight profilers than what I just explained. But I like imbalances that are in the market at a very familiar price or in a small area. You know what I mean? And that's why it creates like natural resistance too, because all those buyers puke their shorts for maybe even a winner. They all did it and scratched it, and they're bummed they didn't get out down there, and then the market could go back down,
17 contracts traded, one tick beyond it.
Yeah, and it just swept everybody out, and everybody now got shook out. Again, it stinks, and as much as it happens through a long career, it's not, if you take it personal, it'll beat you up. But if you just realize and think about that, it's like, well, it's the market doing what it's supposed to do. Too many shorts can't go down. Until what? Until you get those shorts out of the market. Then you could go down. So it's the market doing what it needs to do in order to function. Who else?
You typically talk, you don't do stops. You don't use hard stops because you're quick.
No, it's not because I'm quick. It's because I have a predetermined spot I want to get out. And it's not physically being quick. It's mentally saying, I could reckon I'm going to get out. I don't need a machine to do it for me for one contract trades, or you could set a minimum, or I'm only going to get out when 150 contracts trade. And that's better than allowing one contract in a market like the ES to stop you out, because they got, real good. Most platforms have the ability to say, no, 150 have to trade there, and then and maybe you'll miss it here and there, but that's better than a one lot shaking you out and stopping you out. But, and again, I don't recommend people not use hard stops. In fact, I recommend you use hard stops until you get comfortable in your discipline to execute and do what you say you're going to do. How often in life, if you just did what you say you're going to do, you'd be so much better off, right? Same thing as happening trading.
Take the heat and then come back and then get out.
Well, no, right. I don't want to chase it. Does that happen? Not that often. I'll usually chase it, puke it at the 6th tick, and maybe it'll come back. I don't want to just always be like this. For me, if I'm long here and the market's against me, saying, all right, let me get out here and hope it comes back and gets me out. Depends on the day. If it's a volatile day, I don't want to do that. If it's a slower day, I can give it a little more room to breathe. But if I take, and then how quickly did it give me a 6 tick, 6 ticks of heat? Maybe I'm just out at the 4th or 5th because I just stunk on that trade or that location. See, it's not the trade that sucks, it's the location that stinks. If you guys could think about it that way, say the trade was great, but location was bad. Because then you try to create another bias. But as far as that goes, is I don't like chasing it, because then a 6-tick loser could turn into a 12-tick loser. Does that make sense? So you want to have your ultimate, I don't want to be involved in this relationship anymore moment, right? I'm done with her or him, and that's it. And so for me, that's me personally in the S&P, 6 would be like, man, I screwed that up.
Or you usually ready to sell them.
Yeah, not slam the mouse, but I don't want to, depends how quick 4 happen. Yeah, if it's 4 quick, relatively speaking. I really try not to give people an impression, trade like Anthony. I want you to think like me, but nobody's going to trade like someone else. But I don't know your experience, but in a prop firm for us, when we were training junior traders, it was never a routine. Now, maybe it could be done differently to have someone sit behind someone else and watch them trade. We try to do that, and then what happens is you don't know if you're making the same decisions as you would be if the guy wasn't behind you. And if you don't think you're making the same decisions, you're going to get really mad if you lose money because you got someone over your shoulder. So you got to have the right people, because trading isn't a spectator sport. People who play basketball and football, they grow up playing around other people. In trading, you're not supposed to have everybody looking over. Oh, why'd you do that, Anthony? Hey, why did you just put the order in and take it out? You got to put yourself in a box, And that's why the value of the trading room is to listen to my opinions and not. I don't think there is a good room that would be piggybacking off of someone else's trades. You're not going to look ever like Brad Pitt, right? So don't try. You can cut your hair and maybe look a little better, but you're not going to trade like someone. You're not going to look like someone. And that's what's important, not to get too tight into what someone's doing and try to replicate too much of it. But the idea and the progression is what you want to get down, right? The technique. And the other thing about this is, are you sloppy? What kind of mechanics do you have? Most people have bad mechanics, and you wouldn't know it unless I ran you through some tests and say, man, your mechanics stink. It could be simple as your ability to trade the dome you're on, and manipulate your orders. Your mechanics are sloppy. I remember my prop firm days. This was after a prop firm. I shared an office with a guy, and it was boring. There wasn't much going on, and I would just click the bids below the book, Click, 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 put the order in, take it out. Click. He said, what the hell are you doing, man? Don't get sloppy. And I said, yeah, I was just doing it because nothing was going on. I was putting live orders in. Now, Wade was way far from the market, but what he said is, don't get sloppy. You're getting sloppy. There's no reason to do that. But and I don't mean that as an extreme example, but there's a lot of sloppiness and poor mechanics among people who risk their money, and there's no excuse for it. Go ahead, Mary.
You don't trade with hotkeys? You actually click a mouse?
Yeah. And I don't have.
Have you tried both? Or?
I have, yeah. But it's like an old habit. My biggest change in trading is, instead of being tick sensitive, I'm area sensitive. And I was talking to Chuck about this during lunch. And if you hadn't made that transition, become too you become too sensitive to the tick. You know, years ago, guys, it was you want to be long bids and short offers. Because if you're long a bid, you could immediately scratch it, technically, right? Because people are bidding, which means you could sell it to them, and you're long and you got to sell it to get out. If you're long a bid, short an offer, technically you had an edge. The markets have changed, not just in the HFTs, but you're not going to get those scratches, you know, and most people pay too much in commission to afford to just scratch their way out of stuff. So you got to look at an area and not be too worried about price. The other thing is your best trades are losing trades. Don't avoid them. Those are your best trades. And your worst trades are missed trades. You always think of that. That's the problem with improper review, is that it's too invisible of the trades you miss because they don't show up anywhere. But yet, man, they hurt you. Missed trades are your worst trades because you're mad. What do you do when you're mad? Bad stuff. You avenge trade. You know, I ain't going to miss it this time. I always say to people, if you miss a trade, trick your mind like you caught it. Because, you think about it for a second, if you caught a trade you missed, would you be looking to do anything? No. Well, then what the hell are you looking to do something for? Make sense? You already got the hanging curveball. He ain't going to throw it to you again. You missed it. That's got to make sense to you. So if you did miss the trade, would you be looking to buy it again? No. Well, what are you looking to buy it again for? You're not going to ever find that out unless you review with someone.
Yeah, I feel like it's like that profile example. If you miss that meatball down there, you know, and now it's at that top right corner consolidating, not enough information, you'd be tempted to buy it if you missed it, but really you shouldn't.
No, because you're reaching. So you should already been long and had, you know, and that was, I raised my hand and John didn't see me, but then he ended up repeating it because I said, repeat that, because that was pretty potent, where you want to catch it as soon as it's happening. And we'll show you ways to get better with your timing in those mechanics, because that's what people do. But think about it, that's what fifth graders do. The chart is bullish, and they go, this market's bullish, it's going up. No kidding, little Johnny. What else you got to tell me? Well, the earth is round. Daddy, I learned it in school. All right, good, son. Now let's worry about what's not so damn obvious. People reach all the time is the point. They reach. What the whole trend is your friend? Trend is not your friend. The trend is usually when you notice that the trend is bullish, yeah, it's too late. Should have already been long. You know, you got to be careful. It's fine to play the long side of an uptrend. But you got to be careful because you miss some of it, right? And it's that whole dynamic of what these exercises are for. People who are short got to buy it. People who are long got to sell it. So when you miss a rally, you could be damn certain there are a lot of people long, better than you, sooner than you, and they're sellers. And they're getting out for profits while you're thinking to get in. You missed the move. You're buying the house after it already went from 200 to 400,000. So you got to be careful with that.
That example you gave up there, I know a lot of times you're using the following the birds, isolating our support resistance area. But once you're in that trade, is your eye on the chart there, or is your eye really more on the dome, looking for that?
When I'm in a trade, Peter, I'm glad you brought that up. The dome has always been to me something you could watch a lot more years ago, and there's a lot of tricks. So you got to be careful what you're trying to analyze with a dome. The dome still, to me, is the windshield, and the charts are the mirrors. So I don't have the longest I spend staring at the charts, Peter, is when I'm illustrating something for room guys and drawing it up. But if you look at your head on a swivel, to me, the information of what's going on right now is on a screen with a bunch of domes on it. Because I could see oil, I could see maybe the bonds, the yen, the DAX, the NASDAQ, all in one shot. Something moves, I could, you know, not necessarily I'm going to trade every uptick or downtick, but I could see it. And then I could turn, like with your mirrors, and reference where are these things going. That's a question you always ask. Where are these guys going? You know, one thing that we're going to talk about tomorrow with these B2B bars is, you know, detaching yourself from an opinion. Remember when I said you put an opinion out there? First of all, it's kind of tough to put an opinion out there. It's even tougher to get it back. So when you open a position, you're telling the world, at least mentally, I'm bullish. and I'm putting money on it. Ah, shoot, I'm wrong. It'll come back. Let me wait. I'm gonna buy some more. And now your mind really does everything it can to avoid being wrong. And that's why your plan has to be, it's like, hey, you know what? I'm supposed to take losers, and it's violated this area, for instance. Let me get out. It's part of the game. But trade's too important. The decision to get out of it's too damn important. You want to avoid that. But these B2B bars, how does it detach you from it being your opinion? Here's how. It's not your opinion anymore. It's the market's opinion. Is the market changing its opinion? Of course. That's why it goes up and down. Well, we're changing our opinion. We're too attached to our opinion. So just get attached to hey, if the market changes, it's mine. Well, was I wrong? No. I'm consistent at saying it was bullish and then bearish. It happens. Why? Because the market was bullish and then it was bearish. It changed its mind. You know, we're trying to uptick our timing and everything, but that's what it is. And so to whet your appetite, we'll talk about what they are, why they stand, what's B2B in B2B bars, bullish to bearish and bearish back to bullish. Sooner rather than later to find out when the market changes its mind. Sooner rather than later than whom? Those who aren't as privy to good chart reading skills as we are. And remember, this 3-day workshop, I'm not even touching into intermarket relationships. It's all about order flow with the footprint, using it to find better locations to execute profile opinions. It's a big weakness of profile, and John's the first guy to admit it. First time I remember talking to John was several years ago. He said, you couldn't be more correct, Anthony, is that a lot of people think the profile is a crutch, you know, it's going to give me my all my skill in one box. And one of the biggest weaknesses of profile is, while it gives you a decent opinion, it's bad at giving you a good location to execute that opinion. And a lot of people take too much heat than they want, and really troubling when you're right and lose money. There's nothing worse than being right and losing money. And a lot of times, just profilers are bullish. They should be bullish. They're long. They took too much heat if it's a winner, or they get stopped out and then it was a winner. So they're right and lose money. And that's what we're all trying to tighten down with the footprint, is better locations for what the profile might be showing you using the footprint. Anybody else?
So just in your example, how would you have used the footprint to keep yourself out of getting stopped out and then having to come right back in?
Well, not necessarily the footprint. It could have been time, right? Could have been time. The other thing is the mechanics of scaling. I don't like to be all in, all out. A lot of people are. And so while the price, remember, was coming to me, yeah. But what I scale out, what you scale out, is relative. If I take 3 ticks, that might not be for you.
So you could have waited, you could have seen how short the market was using like Delta or something.
And
Waiting for a better entry.
right. But you also use good rotations in the footprint and delta profiles to say, yeah, there might be a lot of buy stops up there. So if this short doesn't work, I ain't going to give it a long leash. Does that make sense?
Or not even put it on to begin with.
There you go.
Yeah.
Yeah.
Put it out and take it as a head fake.
Backside of a shakeout, right? You guys remember I was talking about backside of a shakeout? You know, I want to get short in this area from that example. I'm going to wait, though. If I miss it and it goes down, I've missed a lot of trades. But I want to wait to see others get mad. Who are the others you're looking to get mad? Other shorts. How do they get mad? Well, in that example, they got stopped out. And it goes in, and it has a head fake pattern. And there's some other patterns that we'll quickly go through tomorrow, head fakes, long up, down bars. It's that whole concept, Mark, of you clear out the other week shorts, now I want to take that short. And if I'm wrong, I'm wrong. At least I know I'm on the other side of a shakeout. That make sense?
So you said time just then, and also you said earlier area. What is that? What does that mean? When you
Well-
say time, you're looking at time of day, or?
No, time, and again, it's relative. How much time are you allowing it to work? Time is of the essence, right? It's like in any investment. If I give you money for 30 years, I expect more interest than if I give it to you for 30 seconds. So a location is always determined by how much time it takes to go your way. The quicker it goes your way, the better the location. It's all relative to your time frame. So if I'm short and I'm a small time frame trader and the thing isn't going, isn't doing this, I probably I'm out. You know what I mean? It's like I'm out because I've given it enough time. Is there a scientific answer on how much time? No, because it could change day to day based on volatility. It could be 5 seconds in a volatile market, 2 seconds in a volatile market. Like when that Trump when he released his emails, I think it was on a Tuesday, and it was 11 minutes after 10 Central. and it was bearish, but it was a little late. It broke 1.5 points, the S&Ps, but it was worth, take a shot, and if it doesn't go right away, get out. Does that make sense?
Yeah, you're not looking at price, I understand that. So you're looking at what? What, you're looking at areas? What?
Well, for that example, I kind of got off on a tangent. That's a different type of trade and everything else. Yeah. No, it was a different kind of trade. But when I say about areas versus price, it's an area of prices, not one price. Don't get too tied up in, it's one tick away, right, yeah. So if you could, that gives you more of a helicopter approach and say, if my area isn't violated, I'm fine. But time has to play a little bit of a role in that.
It's just kind of irrelevant, it's what's happening at those areas,
Yeah.
times that.
And don't be part of the hype. You know, the best thing that I could ever teach my kids is not keep them out of bad situations. It's to give them the right kind of guidance to make good decisions in a bad situation, right? I can't keep my kids away ever bad, but I can give them the guidance that maybe they make a good decision in a bad situation. How objective are you in a very subjective environment? And that's when you have a trade-on, right? Good decisions. It's hard to do, and it's a skill.
Well, it's hard to explain all that as well, but I get it, I understand.
Yeah, and it's about repetition of seeing it, building your mechanics, and knowing when you stake. And people don't like to be told that they're bad when they're bad, but that's the time, the most important moment to say you're bad. Like I said earlier, how do you know you're in your weak? Everybody's got high and low points in our personalities. We're good, but then we're weak and we're not a good person. Well, how do you get better? At least admit when you're a bad person, and you could snap out of it, you know? That's what I feel I got a great marriage, because when I'm wrong, I'm wrong. I don't beat and fight and say, no, 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 and it becomes just a match of ego instead of, yeah, I screwed up, you know? I don't want to say that a lot, but you got to admit it and just be done with it and have very few non-speaking moments. But that's Thursday's session. If you want to stay for a bonus relationship session, we could definitely, we could do that. Anything else? And we'll get going with, let's take a quick 5-minute break, and then we'll come back. Trevor will introduce Dr. Brett.